The Financial Conduct Authority, the FCA, is placing increasing focus on the payment sector. In its most recent business plan, it named making payments safe and accessible one of its key priorities for the next 1 to 3 years. Last July, the FCA also sent a Dear CEO letter to payments firms, reminding them of the importance of complying with the rules and informing them that they would take action to protect consumers for those firms that didn't. The letter is interesting because it indicates the FCA's concerns that the rapid growth of this sector and the increasing number of players within it may be creating risks that could harm customers and undermine market integrity. In terms of recent enforcement action, earlier this year, the FCA publicly censured a payments institution for failing to safeguard funds and for accepting deposits without authorization. The FCA indicated that it would have imposed substantial financial penalty had the firm not been in liquidation and had it not had substantial liabilities against creditors. The PSR is a relatively new regulator and has been building out its enforcement capabilities in recent years. The PSR has made clear that having a credible and agile enforcement function is key to achieving its statutory objectives of promoting competition, innovation and protecting consumers. The PSR currently has a small number of open enforcement cases looking into potential breaches of the interchange fee regulation and the payment services regulations.
And in the antitrust space, there are 2 recent examples of enforcement activity. The first was from March 2021 with the PSR's first announcement of a provisional decision, and it's concluded, or provisionally concluded, that there's a cartel in the prepaid cards market. It found that 5 companies had shared markets and allocated customers between them, and it's provisionally concluded that that had a detrimental impact on prices in the sector, that it reduced innovation, and in particular that it may have had an impact on the public authorities that purchased those prepaid cards. So that's an example of the PSR going after a classic cartel in the payment services sector. The second example is from the European Commission. In June 2020, the European Commission announced that it was investigating Apple Pay. The particular concern the European Commission has is that Apple only allows itself and its own services to use that technology on its mobile devices. The concern the Commission has is that that restricts competition, may also reduce innovation, and might constitute an abuse of a dominant position. That's a really good example of an increasing trend we're seeing in the antitrust space, which is both complaints against established players alleging an abuse of a dominant position, and we're also seeing claimants bring claims along similar grounds as well. There are 3 key things to keep in mind. The first is the importance of antitrust training, regardless of whether you're an established company or a startup that's just got going. And the importance of that is because, firstly, it can prevent these sorts of issues from arising in the first place. Secondly, it can help you detect problems that might arise in the future. And thirdly, if you do find yourself in a position where you are being investigated, the fact that you have those compliance programs in place can reduce the fines that you're subject to. The second key message to get across is that if you are subject to an investigation, it's very important to comply with the request that you're given, to instruct experienced external counsel, and to think really carefully about the strategic options that are available to you. Because choices you make at the beginning of an investigation can have consequences for years to come, especially in subsequent issues like litigation. The third key message is that investigations by antitrust authorities are rarely alone. So companies will often have to think about notifying other authorities and other regulators, including in different jurisdictions. And if you are faced with that situation, it's absolutely crucial to ensure that you choreograph and coordinate notifications to those authorities to ensure that they're consistent.
From a regulatory perspective, if you identify a potential compliance failing or a breach of the relevant rules, you must consider whether you are required to notify the relevant regulator or regulators. Broadly, regulators require notification for anything that they would expect notification of. And if the compliance breach is ongoing, you should take immediate steps to address the issue. If it is not possible to close the breach immediately, you should engage with the relevant regulator to put in place measures to address the breach. The PSR has indicated that it has closed enforcement actions against a number of firms on the basis that they have developed and implemented plans to close compliance breaches. The PSR has made it clear that this does not mean that it will not take enforcement action in the future in relation to similar scenarios, but it is nevertheless an important step to take to minimise exposure.